What's up, guys? How are we doing today? Quick little sound check. Can you guys hear me all right? Awesome, awesome. All right, so I finally fixed the error with the Pancake Music Box. So all I have to do is, when I disconnect it, I have to not be on the stage. Awesome. I am doing amazing. Just had a very great day of trading, to be honest. It was an awesome day, so always feeling good when that happens. Let me share my screen with you guys and we can dive into more precisely what happened today. All right, so right here, as always, we have my IPDA layout right here. We have NQ to our left, ES to our right. As we can see, we had a beautiful day. Oh, actually, here, give me a second. I have a little thing I have to answer very quickly. It won't be long. All right, I apologize for that. So as you can see, we had a very large range day. It was 420 handles on NASDAQ, which is pretty fucking crazy, and 100 handles on ES, which is even crazier, right? 100 handles on ES is about 2 times the range of any normal day. But if we look to the left right here, we've been consolidating for a while, and now we're starting to expand. We are having some pretty large range days, and it is lovely to see when it moves that much. Now, just looking at a daily chart, we don't have a lot of information as to what is currently going on, because once we dive a little deeper, we see that, hey, our move that we were looking for, which is taking out these highs to then dive deeper, dive lower, which was the main move we were talking about yesterday. It was, okay, we're going to go above these highs. I mainly wanted to see SMT and it take out these highs, but we did not need to, apparently. I would like to see it. As I said, we actually went lower and there was no SMT present on the higher time frame at this specific time. If we dive lower, we'll find SMT, not in a 1 hour, but if we dive even lower. But what can we see now that we head in the 1 hour? Our 8 a.m. candle did the whole fucking range, and then the rest of the day, all that we've done is trade into it, right? And I don't know if you guys are watching the CPI numbers going out live, but I saw it in about half a second. We ran, what is that, 100 handles higher, did a beautiful stop run on these highs right here, and then we expanded lower. On ES was a tiny bit cleaner, and also on ES we did reach external range of liquidity, which I believe we barely induced on NASDAQ. Yeah, exactly. We did touch this precisely. Yes, exactly. So we did not reach external liquidity on NASDAQ, which means that this is inducement. These are equal lows now, but it also forms SMT. We'll dive deeper into it in a second. But it's just to show you guys that there was not much opportunity, even with such a large range day, because of how price delivered, right? Price delivered only with the news. If we go more precisely on the NASDAQ right here, I'm in a 1 minute chart right now. So we had what is that? That is 246 handle move in a minute. So even for CPI, that is a huge move. And if you count 2 minutes into it, then you have 300 handles. Right, you give it 10 minutes, you have the full daily range right here, right? 942. It took 12 minutes to create the full daily range, and all that we did afterwards, following this day, let's just say I head to a 15-minute chart, which is my favorite intraday time frame, by the way, if you guys were wondering. All that we did afterwards was just trade inside of it, right? This is 9:30 right here. We just mark that as red so it's a little easier to see. This is 9:30 and this is 4 p.m. Right? What is this? I'm asking you guys. I want an answer in the chat right now. What is this? How would I classify this price action? No wrong answers. Consolidation. That is exactly the fucking word I was looking for. Right? What did we do? We consolidated within our range. Right? We're within a range between highs and lows. Exactly, consolidation. So we're in a range. We swept highs, expanded towards external range liquidity, and we were almost gonna head for those, but we induced that. Whether that SMT, by the way, if I go back to this, whether this SMT, so just to not mark out anything, I'm gonna put it right here so you guys can see it. So it's SMT in relation to this liquidity right here. I would disregard this SMT because it is too close, and once you implement the context into it, it doesn't make sense for me that price would stop here. So by the way, for the following days, I'm looking for continuation lower. I believe that is our Wednesday reversal. That is high of week. The only thing I don't like about it is how we don't have SMT, right? That's the only thing that is not pretty. Sorry, as I said yesterday, I'm messing around with my chart colors a lot. So let me just set that up real quick. There we go. So I'm looking more specifically for SMT to be formed at the high of the week, right? And I don't have that if I'm looking only at NASDAQ and ES. And that's where the Dow comes in, right? There is SMT between the Dow and the two main indices futures. So I could consider that my high of week. I'm going to be looking for this to be respected. How would I know? Well, the deeper we dig into this, the less bearish we are. Right? Sorry, I just wanted to have that little side note before we dive into how you can actually trade within these ranging markets, right? But I just wanted to point out, so our move that we wanted to trade, that we anticipated, just didn't give us an opportunity, and that happens sometimes, right? The news did the whole move, right? We're consolidating for a while here. If you look, right, that's Monday. Tuesday we had a manipulation lower to have the move higher, which in my eyes, as I just pointed out, is my weekly manipulation. So I'm going to be looking for lower prices. Again, just I'm repeating myself, but targeting the low resistance liquidity if I head to a daily chart, right? This low on NASDAQ, which as I said, we would prioritize ES for going lower because it's cleaner for a low resistance liquidity run than NASDAQ is. So as we can see, ES did a way more beautiful move, reached external range liquidity, but I'm going to be looking for a continuation lower towards these lows for ES 100%. And if we look at a weekly chart real quick, you'll see that this order block would need to be disrespected. Basically, I want to see us go all the way down to this order block, which we have not yet retested. And right, we'll see later next week, but even deeper within this range is a possibility. But going back to what happened today, even though we did not, well, we missed this opportunity, you could have been looking for a retracement higher, right? After that 9:30 opening bell, you could have been looking for a retracement higher. What specifically would allow me to take a retracement trade? Well, here's some sauce for you guys. Whenever there's going to be a retracement, if there's no SMT at the lows, it is not going to retrace to premium or discount, right? In relation to if you're looking for a bullish retracement or a bearish retracement. If there's no SMT, it's either because price is in a rush to go away, so it's retracing, but it's going to barely retrace before continuing lower, or it is because it will not retrace to premium and discount at all. Basically, I want to see SMT at the lows before I can consider taking a trade. Very quickly, if we actually go compare these charts and we look at the 9:30 open, let me just remove the indicators for this so we can see something. Right here, you'll see I have no SMTs at those lows, but where do I have it? Right here. Wait, where is it? It's in a 1 minute chart. Sorry about that, but this formed a swing low. This is another type of divergence. It is not SMT. I'm going to talk to you guys about things you can understand. As I've marked out right here, we had SMT here and SMT here. Exactly. So lower, I'll just mark them out so it's easier for you guys to see right here. And we also had SMT just before with this low, if I'm not mistaken. Yes, exactly. That is the SMT you wanted to look for. So if I go back to my other chart and I go in a 1 minute chart, As you can see, right, this is a very tight range. We've been trading within, well, very tight range relatively, right? But we traded within this range for the majority of the day, to not say, well, the whole day, actually. What were we doing? We were taking out both extremes at all times. So we took out highs to then go target lows to then go back higher. Oh, this could be a retracement, stopping around OTE, continuing lower, failing to reach sell side to then go target buy side. What is that? That's pure consolidation, right? But there are still opportunities within this consolidation. And at the 9:30 opening bell, would I expect consolidation? Well, you could anticipate that due to it already being a 420 handle move, that there would be some consolidation, right? Some accumulation, and price would need to slow down before it could make another low resistance move. Sure. But does that mean I am not willing to take a retracement within our range? No, I can grab an 80 handle, 100 handle move, retracement into the range pretty easily, and then let it consolidate without me for the rest of the day. So I was still looking for opportunities. But as I said, in markets like those, if I'm going to be trading a retracement, I need SMT, right? And when did that SMT happen? Well, more specifically, during the 950 to 1010 macro. And yes, SMT that forms at certain times is going to be more important to me. But why is that, right? Let's just take a second and think about why that is. It's not because, SMT at 1010, between 950 and 1010 is more important than the other one, higher probability. No, just think about it. Okay, so if a swing low or swing high, or swing point, let's just call it market structure. Market structure that happens during a macro where the algorithm has a clear objective that I am trying to understand tells me everything I need to know. So for example, a fair value gap being inverse during a macro gives me information and context. So in this specific example, inverting this fair value gap, I like to have purple for my inverted fair value gap, so sorry if it's very colorful on a black and gray screen, chart, sorry. So sorry about that in advance, but inverting this fair value gap gives me a lot of information about general direction of the chart. Why? Because I understand that the algorithm had an objective. If I look on the ES, right, this made a lower low. So we took out liquidity, retracing into a discount of our range, right? I'll even draw it out for you guys. Not even pulling out OT, just looking at premium and discount. We retrace to a discount. ES, here, I'll just go to the same time on ES here. I have a lot of drawings, as you can see. So on ES right here, what did we do? Same thing. We retrace into a discount of our current range. I believe that's also a discount of the huge range, so I'm going to mark it out like that. Took out liquidity, later forming SMT as well into what? To my first discount in efficiency. And right now I'm in a 15 second chart, which I just noticed. So just right here, I'll head over to a 1 minute, because I don't want to teach you guys to go lower than a 1 minute, because that is for when you are profitable and you really want to get that precision higher, basically being more precise, having more opportunities, but that's for the future, right? Right here we have our SMT into our 1 minute order block. It was also pretty clean in the 5 minute, if I remember correctly. Volume imbalance right here. Is that a volume imbalance? No, that is not. So no, there was nothing. So yeah, I'm remembering this stuff. I traded a lot today, so I'm remembering this stuff along the way. But right here, we have SMT. And as I said, time is important. What do macros do? Well, they either run to our higher time frame objective, or if my higher time frame objective is met, we are going to spool against that objective towards an opposing liquidity pool. Right? That's some sauce right here that I like to share in my class, but ICT said it best, right? Okay, so what was my higher time frame objective at this point? Well, my move was from external to internal. So we took out external range liquidity, right? And again right here, just waiting for time to be in line. And then what did we do? Well, we needed to now retrace to a discount. Let me mark that out beautifully. So we needed to retrace to a discount before continuing higher. That was my bias. Why was it my bias? Because we expanded lower very aggressively, and now I have SMT telling me, okay, well, now we're ready to go up. So what are we going to do? We're going to retrace. And where are we going to retrace? Those, by the way, I believe is the 5 minute, if I'm using the 5 minute bodies of my candles, right? I just decided to use the bodies, but here, I'll use the wick. Let's keep it simple. I always look at both, by the way. So right here, let's keep it simple. And let's actually move that to the side. So if I look at the wicks, actually, yeah, that's why. So if I look at the wicks, we remained in a discount for the entirety of the day. But when you utilize the bodies, and more specifically the 5 minute bodies, because that's where OTE is most precise, if you did not know this, you'll see that we actually did retrace precisely to equilibrium right here. All of that to say, what was my drawn liquidity? Premium of this range. Is there a clear premium in efficiency? No. Is there anything above this inefficiency? No. So yes, as I tell you guys, you should not use here. You should not use inefficiencies that are near equilibrium or below equilibrium as a premium in efficiency, but there's nothing else. And specifically, this is a data fair value gap, right? Made from the news. So I don't want to see this broken unless I'm expecting higher prices, and I'm not. I'm looking for lower prices. So just the fact that we dove in it, and if we go more specifically and look at our PDR rate quarters right here, this is an institutional order flow entry drill, right? IOFED. So by the way, I'm not going to dive in depth about every concept I'm naming. I don't know if everyone here is familiar or is not, right? And as we move forward, I'm going to be talking to we're going to have some people that are going to be from varying ranges in their trading journey, right? Various points in their trading journey. And I'm not going to explain every concept I'm talking about at all times unless there are questions. So basically what I'm saying is ask me a question if you have a question. But this is an institutional order flow entry drill. We are very bullish from this point on after having retraced to a premium, well, to equilibrium, even though I like to call it a premium. So to go back to where we were a second ago, and if I redraw this, it appears, oh, I'm on ES right now. Oh, well, here. I'll go back to NASDAQ because that was the stronger asset. So that was the asset you would want to long here. And I will draw just a simple premium and discount for NASDAQ in our 5 minute chart. Bear with me, guys. I'm going to make it. I'm going to use the candle bodies. Again, move this because I can't see anything. So right here, NASDAQ failed actually to reach a premium of the range. I did not remember. If I draw it using the 1 minute bodies, though, it reaches. See, that's where there's a lot of hit or miss, right? And I don't want to mess around and make it complicated for you guys. No matter, you can tell that, hey, it consolidated the rest of the day, but we're concentrating on opportunities within that consolidation, which would be the long there, right? So now we're in macro. Our higher time frame objective is met. So we're going to spool against that objective, which was lower. And so we're going to spool higher towards opposing liquidity pool. Where is such liquidity? Well, within this inefficiency and above short-term highs and lows. Where are such things? Well, very simple, right here. Right? This was the opportunity. So yes, it is not the biggest move. And for myself, I believe I actually posted the picture in chat. My entry looked like this. So I had a 15 handle stop right here, and I was targeting this. This is 2.2 hour trade, very simple. I actually reached that, and then I had one contract left here as a runner, and I moved my stop and I got stopped out, I believe, right here under this order block. So it is a very quick scalp. It is a not even a 2-minute trade before taking profits. And then I don't know if I took profits above these highs. I'd have to go check my executions that I posted in chat. But that's not much, right? You could have taken the ES turtle soup. That was definitely where you had the most opportunity, because then you could have held all the way till we started digging into this fair value gap right here, this 1 minute fair value gap. Sorry, this is triggering me, so I'm going to remove consequent encroachment since I have it on my fair value gap. But ES showing that it was stronger at this time, then of course showing that it was weaker, you still had opportunities. But see, like, I have experience trading, right? And I'm showing you one opportunity that is a tiny little scalp, right? And if I was in a 15-second, which is where I was, and the only reason why I had such facility, if I can say it like that, it's still lower probability than if you would just wait for tomorrow, for a nice move tomorrow, right? And now that we've consolidated for the whole day after CPI, tomorrow I'm going to be expecting a lot of movement, even though we had a 420 handle range, because we've been consolidating for the full day, right? For the full Wednesday. So again, I feel like in the last few price action reviews, I'm concentrating a lot on that. So I'd like to see us have a high probability trading day very soon, because I keep talking about how you need to sit on your ass and just wait for better conditions, right? Don't trade to there. There's no point. And we'll be looking at another setup in a second, more specifically in the PM session. But there was also opportunities to short here, but in my eyes, if you shorted here, well, in my eyes there was no point in shorting there, right? I didn't have SMT, which told me that it was not a high probability movement. I was expecting it to keep digging higher and dive deeper in a premium. And then once you actually figure it out and you have displacement right here, it is just not the kind of trade that I want to advertise, right? Once you have this fair value gap inverting, and then you have your bearish breaker right here. Here, I'll just try it out with a line like this. So you have a bearish breaker right here, and then you have a unicorn. So is that a good trade? Yes, technically. But after seeing what happened here, this is very much less of a trade to consider, right? So if we would just look at very quickly what kind of RR it would offer, I sell pretty much the 3PD array rule for the unicorn model. So I have fair value gap here, which is 1, inverted fair value gap, which is 2, and then I have no nearby PD arrays other than that order block with that swing high. So that's a 30 handle stop, and towards low hanging fruit, which would be these equal lows, which if we are to go for a deep retracement, oh, that is not the right drawing that I wanted to change. If we are to go to a deep retracement, we're going to go there and then bounce more specifically into that order block. So it could actually be sweeping these equal lows into this order block. That is 1.74R. It is here, just to answer your question, Flacco or Jordan. So it is indeed a trade. Would I consider that a high probability trade, or a synonym of that, a good trade? No. Why? Because to my low hanging fruit objective, it doesn't give me the best risk to reward, and more specifically as well, I see the conditions we're in. Once you're going long there, sure. But after you see this ranging conditions, and then you see this high being put up, which there's no SMT, which would give me additional confidence that this is indeed a high that we're going to be putting up, that it is a high that we can trust, right? That there is smart money involvement. Well, then I would not consider this a high probability trade, no. So is this the kind of trade I would take? Here is where, see, I'm not a perfect trader, right? I don't believe a trader can be perfect. Prove me wrong if you know one, right? But sometimes I would trade those, sometimes I would not. Sometimes I notice it is a less high probability trade, sometimes I won't. And you know, at that specific time, if you were gonna go short there, that would be your objective, right? You'd be seeing these equal lows right here, and then you would be like, oh well, okay, I'm bearish, see this big move, continuation towards ERL, right? On ES more specifically, that move was a little cleaner, even if we didn't have SMT right here. If you took this unicorn right there, I believe it allowed for a better stop. So you had fair value gap, I don't know, inverted fair value gap, and then order block right here. So it actually allowed for a worse stop. I don't trade a stop that is above 5 handles on ES. I'm showing my specific stop, but I would not allow a stop more than 5 handles just in general on ES. And then you'd be targeting, you know, the equal lows where there was SMT, if I'm being correct right here. Yeah, so the equal lows that were formed after the SMT, so meaning these right here, and target the well, the one before the SMT actually. That would allow for better risk to reward. And ES, as you can see, dove way deeper, even reached this fair value gap right here, which seems to be, oh no, that was for the macro, and even reached this fair value gap before continuing higher. So you had opportunities, right? And that trade was one of those opportunities. And I believe that if you add standard deviations into it as well, let's say I find a good leg, seems to be only this one, and I'm going to be looking more specifically within that leg for the last manipulation. So this move was already complete. I'm going to look further. Right here we completed the move from this manipulation lower, but if I really want the true manipulation, I'm going to be looking at this, and it's just low probability conditions. We're not reacting to the levels we should be reacting. Even if I'm using the leg from where SMT was formed, well, actually that is a good area. So we have what we would like to see right here, not drawn very precisely, but we are within our reversal range. Basically, I'm just running around in circles, all that to say one thing. Was it a trade where, well, here you go, Jordan, if one of my students would come to me and tell me I traded this, would I be mad? No. Why? Because at the moment you're taking this trade, it is very hard to notice if it is perfect or not, right? The difference between an A plus and an A setup, where in ranging markets, I try and not trade A setups, but they are hard to differentiate, right? But there being no SMT there was a big indicator. But as I stated, I can't ask of students or of anyone actually to do something that I don't do myself. I trade those half the time. Why? Because I don't notice. It's too quick, too fast paced. I'm not, oh, there's no SMT, but then I see the standard deviations are within the range I want them to. So like you have everything but that one thing, and sometimes that's not enough to stop you, right? And if we look at NASDAQ, actually that was quite beautiful that we completed the move there. That was terminus, and we had SMR. I actually traded a part of this move. But see, it's just, you had so much divergence between assets that any move today would not be considered a high probability move. Even this move up, this retracement, that was the highest probability. But in best case scenarios, for example, if I'm backtesting and this is a win, I'm not marking that as a win. I'm just not putting it in my document, because that's not the kind of trades I want to concentrate on. That's not the kind of trades I want to be trading, pretty much. So to reiterate what I just said, yes, it is a trade. Would I consider this trade a good trade? No. Do I still trade it? 50% of the time. But now if we dive out of that and we look, well, I'm not even going to go in depth about what happened here, right? If you want to go, just go look at my Twitter. I've been ranting. I had a really good day with my ranging market model. I've been working on this for the past 2.5 weeks actually, so that way I have a model to trade consolidation. That is the easiest way of putting it. But let me just draw what happened after. Well, here, let's go to lunch, right? Lunch, we expect consolidation. And then we had a low resistance liquidity run, low resistance, low resistance. I'm not going to go in depth about, well, I'm not going to draw in depth what happened. But here is your afternoon session. So yes, I could say, hey, I longed this. And then I shorted this. All perfect. And then I longed this, right? I can keep moving forward. But the truth is what? I don't want to be trading those. Okay, what move could you have traded? Well, this reaction right here, okay, that's pretty nice. Doesn't give me an entry model. Right here is too deep of a retracement into this range for me to consider anything else than it is targeting this external range liquidity. Right? This is way too deep. It's far past OTE. If we were truly bullish, we would have stopped here. Or possibly in the next one, but not even. In this specific context, I want to see it stop here. But clearly, that's not what we done. And then we managed to go back above, retest that level, and fail to reach external. And what happened the rest of the day? Well, we traded within this range. Right? We created a dealing range, and we stayed within it. So yes, there are opportunities, whatever, but I'm not going to go in depth about it. If you want to see anything about that, just go study the few pictures within my Twitter. But to go back over quickly what happened today, and here, let me just remove the drawings. We had beautiful power of 3 higher, right? Let me head to a 15-minute chart right here and show you guys what I'm saying. So we have, there we go. So we had beautiful accumulation, a small, I believe that's post-London. Yeah, post-London run on liquidity to bring us higher with the news. So we had a beautiful Judah swing higher right here, and then distribution lower. But within the scope of what we can trade, we didn't have much opportunities during the session. So we predicted a move, which was a great move, but we couldn't trade it because we don't trade during news. And if you want to blow your account, go ahead. I'm pretty sure that when price was here, if you were to click the button, it would have entered you here. Like, that's just how news goes, with how the algorithm and everybody putting in orders at the same times, with especially when you're trading live. That's very different, and you have to get ready for the conditions that you are training yourself to get to at the final outcome in your trading journey, right? Which I hope is live and not being a prop trader for your entire life. Well, at least the Twitter props. So on that note, do you guys have any questions about everything we said? Right? Beautiful day, not allowing us much opportunities. All right. Well, having a lot of my students in this call means not a lot of questions. I am eager for the day when we start having more people in here. I have some questions to ask. But for now, guys, I wish you guys all a great night. Thank you for being here. Thank you for the continued support. I don't say it enough. I appreciate it very much. We're building this community to the moon. We are going to be the best place to be if you want to learn how to trade. That is for sure. So again, thank you for your support, guys. Have a great night. We'll see each other tomorrow for another price action review. Thank you.